welcome you all to our collective calls that we hold every Tuesday and Thursday, and now 1 hour later. But yeah, it's like a new trend now. But one thing stays the same: the hosts of our meeting. So myself, Ivan, and Malika as well as the co-host. And yeah, we've got another four projects as of today to present their pitch deck, to ask some questions and provide answers. So you know the drill. So let me introduce them first real quick. We got Owen or Driscoll, CEO and founder at Trrue. Then we got Raghav, he is an EquiDEI founder. Then we got Valentin and Artak, they are co-founders at Diamore project. And Michal, finally, closing our amazing four. We got a co-founder at MatterFi. So yeah, it is amazing. Another four projects. Really excited to hear them all out.
Yeah, so my apologies. Hi, everybody. It's nice to meet you. I'm Owen. I'm the CEO and co-founder of Trrue. Trrue is building a fintech and regtech infrastructure layer that allows us to stamp out greenwashing through providing verified credentials and providing an infrastructure to allow companies to record these infrastructure under environmental social governance regulations. If you are not familiar with them, did you know that impact companies in Europe are now subject to new regulations under SFDR regulations? And the chances are that if you're operating within this industry, you're violating new regulations, which could generate fines, penalties, and reputational damage. The new regulations, specifically Corporate Sustainability Reporting Directive and the Sustainable Financial Disclosure Regulation, has created a very complex regulatory environment for businesses and investors. The regulations basically impose very significant data collection and disclosure requirements, and this is leading to operational costs and decisions being delayed. So without an easy way of proving that you comply with ESG regulations, investments in this impact space have become very high risk from a compliance perspective. This has led to a situation where there's over 2 trillion worth of earmarked capital for investors that they're struggling to deploy. This stunts the growth for European businesses who need that capital, and all the while the greenwashing continues. So Trrue is a trusted infrastructure layer that enables companies to prove compliance with ESG or environmental social governance regulations and investors to find verified protections. Our solution aims to connect Web3 funds and institutions on a single platform that empowers them to fund and build a more sustainable future. So the Trrue ecosystem is built for trust, I suppose, and eliminating greenwashing, built on 5 pillars. So the Trrue chain is a specialized layer 1 blockchain that powers the whole ecosystem with a proprietary token called TRC. We have a self-sovereign identity agent, which is tied to the Trrue chain to provide on-chain identity for verifiable credentials and store environmental verified credentials. The Trrue governance software allows people to deploy multi-chain infrastructure for equity tokens and other type of tokenization, onboarding, and ESG reporting. And we've built an ESG impact engine, which uses AI to analyze corporate data and assess specific ESG claims to produce impact scores and produce impact credentials in line with SFDR regulations. And finally, we're a fully regulated play. So Trrue will be a fully regulated investment platform that's built on top of the Trrue ecosystem, and this helps unlock capital for ESG projects that are looking to raise funds from impact investors. So by combining these 5 pillars, Trrue can offer an innovative ecosystem that fosters the connections effectively and unlocks capital for investors, funds, institutions on one side, and provide verified ESG impact-focused businesses on the other side with a place to produce these credentials all on a single platform. Trrue operates as a consortium layer 1 blockchain, a delegated proof of stake, and this mechanism offers us to offer a range of advantages such as increased transaction speeds, integrated SSI, and on-chain governance, without being reliant on the Ethereum ecosystem. So the business model, which is kind of the meat, is built on 3 sources of revenue: a monthly subscription fee for the Trrue governance software framework, a license fee for the AI-powered ESG engine, which can be leveraged by various operators, including regulators, and a 7% success fee that's raised through the Trrue Invest platform. Again, it's a regulated platform. But our main objective is really to establish and maintain a robust infrastructure that's tailored to the needs of regulated ESG operators that enable them to effectively create and implement new solutions and build on top of our existing infrastructure. The Trrue team combines world-class expertise in fintech, innovation, legal and regulatory compliance, blockchain technology, and asset management. We lead our experience from top financial institutions, leading law firms, regulators, and successful fintech and blockchain projects. The team is uniquely positioned to take advantage of how the market is right and the time is right now. We have already achieved several critical milestones that bring us closer to successful launch of the Trrue project. We've raised $700,000 in our seed round from VCs and angels. We are registered as a virtual asset service provider registration by the Central Bank of Italy, and along with other strong industry recognition, partnerships and awards that help us get across the line. So our main goals for 2024 is to continue to roll out our community growth plan, complete our fundraise through the Trrue token sale, which will then be followed by our alpha launches of the investment platform, Trrue Governance Framework, and the Impact Engine. In the new year, we plan to launch the first version of the Layer 1, and this will help us roll out our B2B offerings. We are eager to connect with potential partners who share the vision and contribute to our success. We want that are interested to learn more about Trrue and the investment opportunity presented by Trrue Coin. And we are thrilled again to announce that after successfully and oversubscribing our seed round with our lead investor DataOp, this investment will be instrumental in advancing the business. But as we move forward with our private round of Trrue Coin, we are offering a 40% discount to the public, and we're actively engaging strategic VCs to support our development. Thank you for listening to our presentation today, and look forward to the questions.
All right, thank you, Owen. That was a perfect start, I guess. Could you tell us a bit more about your main competitors and how do you plan to compete with them?
Yes, so I suppose Planet Oil sees itself very much as an infrastructure layer. So I think some of our competitors would be somewhere in the mix between the real world asset space. Maybe Securitize would be names that people would be familiar with. Where we see ourselves as being a little bit different is that we're providing the pillars for people to come and build on top. So the 5 pillars that I mentioned, they're all white labelable. So you can come and you can choose your own combination of these. And basically we've built everything from the ground up with the regulatory mind and vision. So if you actually combine the 5 pillars of Trrue as a regulated entity who has a regulation and wants to utilize blockchain and Web3 technology, you're now protected by knowing that the whole infrastructure is being built with this in mind. And this means that regulators, in terms of like where data is stored, how you're storing your SSI, or how you're using your digital identifiers is all really important. Like we believe the regulations bleed into each other. So we were lucky enough to be selected for the GFIN, which is the Global Financial Innovation Network. And that was 15 regulators selected 15 companies in line with the World Bank to create a solution to prevent greenwashing, and that's the AI engine that sits on top. And I think that's one of our unique differentiators.
Okay, gotcha. Thank you. We've got a raised hand from ID, the CEO. So go ahead.
Hi, how you doing, everyone? Hope you can hear me. So yeah, so my question was to the white label layer. I've seen it with the 7% success rate and then 1.5% on top of that. So does that a total of 8.5 that you would charge the B2B?
No, so what it is that in Europe there is new regulations around called ECSP, European Crowdfunding Service Provider Regulations. This regulation allows you to, it's basically new regulation around TradFi, but what we've done is we've coupled this with our digital identifier. So the success fee is based on success raised on the platform, but our infrastructure and digital identity allows you to securely and legally transfer equity tokens between each other in a peer-to-peer fashion. This creates a new type of secondary market for equities. Within that, we charge the purchaser of that 1.5% within that secondary market. So it's a second revenue stream rather than added on top.
Understood. Got it. Thank you.
Okay, thanks for the question. Expecting more questions, raise hands. Meanwhile, let me remind you real quick that Malika posts very carefully all the details and the contact details regarding our speakers. So you can find all the TG handles and email in the chat. So if you're interested in collaboration, feel free to go there. We've just received a question in the chat, even 2, so I can read them. Can you explain how the white label solution offered by Trrue benefit institutions and retail investors in expanding market access?
Yes, certainly. So if you're to, and I won't mention any names, but if you're to look at pilots that we're currently working with, it's access to new types of tokenization within the TradFi world with the view of disintermediating some of the middle actors and actually growing their market access directly to retail by digitizing the whole process and removing the intermediaries. So we're in a unique spot at the moment where the tokenization world and the institution world have now fully aligned, and they're actually seeing that the beauty is being able to come to platforms that are pre-built, build their solution directly for them without them having to go and build a whole infrastructure or a whole layer 1. So we do feel like, for example, we are partnering with a company called MatterFi at the moment, which we're looking to ingrain in existing real-world asset infrastructure and tokenize large tokenization funds. The view from those funds is that they are now also looking to branch out and actually utilize the software to grow their market and actually reach into retail, something they haven't done before.
Okay, another raised hand from Alan. Please go ahead.
Hey, Owen, could you please briefly talk about how the consensus mechanism works?
Yes, so we I suppose that one of the things that we've looked at in the delegated proof of stake is actually having a public blockchain that's run and operated with regulated validators. This provides a certain amount of security. Like if you are already regulated and you're not in the technology space, you want to be able to come and access this technology, knowing that below everything that you're doing has everything in mind, right? So we believe regulations bleed into each other. Payment regulations, digital identity regulations. So we've designed it as a delegated proof of stake with trust anchors that are either regulated to issue a verifiable credential, so somebody like a KYC provider that might be regulated, or also just a regulated entity. So somebody like ourselves, who's got a vast regulation, like we're a virtual asset service provider regulation, there is a large need for people with their type of regulation to actually run nodes for people who are trying to create networks similar to ourselves. I don't think there's a whole load of them, but Trrue are pretty unique in the way that we're trying to create a trusted network and try to take the best from both worlds, I think is probably the best way to put it. Now, this self-sovereign identity layer adds another layer of verification and credential in there, in that it's built in line with the European Digital Identity Directive. And this allows us to build a set of verifiable credentials and tie it to the blockchain, which allows us to kind of flip on its lid the ownership and the transfer of tokens, which happens at the signature level on the identity, whereas before it used to happen on the blockchain layer. So it puts a little layer of control that helps with regulation. Plus, because we have a delegated proof of stake, one of the big things with regulators is the storage of data within certain jurisdictions and knowing where that is. So by us having a delegated proof of stake, we can address that as well.
Got it. So you mentioned about the following compliance of EU's compliant framework. So I wonder, is that your first bench of customer coming from that region? Or?
Well, so what you'll find very interestingly with those two specific regulations I mentioned, and I won't bore everybody, but SFDR, if you'd imagine, that's for the sources of money. Banks, large amounts of money. Underneath that, you have CSDR, so that's the corporates. The people who are giving out money need to be able to prove where it's going and the claims that are being made around it. But the people in the CSDR, they're stuck with having to deal with nations outside of Europe. So if you're in a corporate situation, you now need to prove up and down chain and all the way either side of the credentials, whether they're in Europe or not. And this is actually creating a massive problem, because it means people that want to operate with Europe now need to adhere to these types of credentials and be able to prove them. So yes, it is a European regulation, but it's actually leaked out into a global thing to allow people to operate back into Europe and vice versa.
All right, thank you.
Thank you for a question. I'm going to read another question from the chat. What specific real-world use cases have already been developed or are in progress on the Trrue chain, and how these projects impact sustainable finance?
Yes, so that's a great question. One thing that we're really proud of, and actually one of my partners is here on the call, and maybe he might want to take this about the ESG engine, which I think is one of the more exciting bits. And Owen, if you want to give yourself a little introduction, which would give a flavor to why that's so good.
Sure. So my name is also Owen, but I spell it differently. So I'm 30 years traditional finance. I worked for Goldman, State Street, BMI Mellon. I worked in asset management. So I'm an out and out boring debit and credit accountant with risk frameworks, and have been through the whole ESG evolving landscape and what's actually turning sour on it right now. So where Owen is very much Web3 and vision, I'm very much the boring TradFi guy, but together we make the perfect Owen, even though we spell it quite differently. To me, the exciting piece is the ESG AI engine that we have in the GFin sandbox. So to be one of only two Irish fintech, regtech, Web3 in that sandbox, developing this with Munster Technology University, being paid for by state funding. There's a lot of really anchor calibered partners behind this initiative. And the biggest issue we have is greenwashing, green bleaching, green hushing, all of the various bits and pieces that people are trying to clean up. So if you can do this with AI, which is far faster, far more penetrative, and gives back an unbalanced, unbiased, non-human interpretation, that's really going to help us call out where all of these faults are and how we can chart our way forward. So to me, that's the most exciting piece, because I've seen it go badly wrong on the TradFi side.
Okay, thank you so much for answering this question. It is really a great question. So guys, do we have more questions to Owens? Maybe. Okay, I think we can move on. Thank you guys so much for happening here on our call. It was a pleasure hearing you out.
Thank you very much for listening.
The project. And yeah, we
Thank
move
you.
on. With the second project, we got Raghav Gupta, EquiDEI founder, is here to present his project. So yeah, welcome.
Yeah, hi everyone. Glad to be connected here. My name is Raghav, founder of EquiDEI, building this company with a vision to generate wealth by tokenizing factories. So a quick background about me. I'm an industrial engineer working in the Industry 4.0 space for the last 6 years, which talks about blockchain, AI, and IoT solutions, largely for the manufacturing supply chain sector. I am a well-renowned scientist with around 6 patents in this arena. Have won a lot of government grants from the government of India, like DST, C3IR and MatterFi, amongst a few of them. So the opportunity that we identified was that as much as 40% of the businesses around the globe have unmet financing needs of around $5 trillion. While it is a well-known fact that these businesses have more than $2.7 trillion worth of illiquid assets in the form of their plant and machinery, real estate and invoices, which the current traditional financial system is not able to fund and provide liquidity for. So we tried to do a market analysis and understood that why are these businesses not able to raise investments from banks and NBFCs. Turns out that there's a lack of trust and transparency in the valuation of these assets. And whenever a lending institution is trying to write a loan to such a business, they are facing a lot of risk of frauds and money laundering. Now, to solve this, we have tried to build this decentralized physical infrastructure network where we try to tokenize manufacturing assets. We deploy certain shop floor level IoT sensors on the ground of a business to track the real-time operations. More than 20 real-time data points like the daily electricity consumption, machine runtime, is corroborated with financial information of a company to generate more than 40 financial KPIs with the investors so that they can keep a track of what is the actual cash flow, runtime, and profits of a company that they have invested. The idea is to create a decentralized token through which any business around the globe can tokenize their assets, which can then be used to settle their B2B payments, raise investments, and manage their payouts. So this is the stack underlying the entire technology. We are trying to build trust in industrial finance using a Web3 plus AI technology. Our calculation on the World Bank's data show that focusing on the manufacturing sector will not only boost the GDP around the globe, but also help in creating a lot of jobs in developing economies, which is much needed right now. This is the patent that we hold. We have a zero-knowledge proof-based machine learning pipeline through which we correlate this real-time operational data with the traditional financial and taxation data, which is stored in a very regulated way in the local servers of banks and taxation authorities around the globe. So this is the USP for financial institutions. Right now, we are starting out in India, where we have already been able to tokenize around $15 million worth of manufacturing assets. We are working directly with the government and the central bank here. We are also one of the 8 companies working directly with the government of Telangana and have partnered with around 8 lending partners. The second largest MSME lender in India with around $300 billion worth of assets has successfully completed a pilot with us. And there are more than 8 financial lending institutions who have partnered with us with the asset value of more than $500 billion. So right now, we only charge our tokenization subscription to a lending institution who pay us around $25,000 for every 100 customers that they onboard. And for any new transactions which happen, we earn a transaction fees, which can range between 1.5 to 3%. So we have been able to forecast a highly profitable model using this, looking to raise $1 million right now to be able to invest in full-scale product development and go live with 6 financial institutions starting out in India. So this is about the team. Right now, we are a tech team which is working together, backed by the best bankers in the industry. For example, the ex-CIO of State Bank of India, as well as co-founder of NeoFi, which has already provided software solutions to around 40 banks in the Asian Pacific, and the strategic consultant to the World Bank and the Asian Development Bank. All of them have invested in the company and joined our board. And we are also backed by the very reputed bankers like the VP of Webmo, who was also the lead developer at FICO, and the MD of Accenture Strategy, along with many other grant programs like Hasdrop Innovation, the blockchain on which we are building our infrastructure has invested in us. So this is the company building this project with all our partners and teammates to create a more diverse, equitable and inclusive society. Thank you so much, everyone. Pleasure to be connected here and look forward to answering any questions that you might have.
Okay, thanks for being in time. Okay, guys. I think I'm gonna be the first one addressing questions. So how do you link businesses like banking to DeFi? Could you explain this process thoroughly?
So as I mentioned that we have already built our platform on Hedera, which is an enterprise-friendly chain. So what we do is that we use their Hedera consensus service, which does not restrict us to enable a bank to set up an Oracle and share the data with us. So what we rather do is that we are able to do a simple API integration via following all the cybersecurity protocols like CSS, PSS, and so on, which the banking industry follows, readily into our system. And those APIs can then be integrated with the Hedera node, and the transactions can then be passed on to a smart contract so that transactions can be executed on our layer. So this is on the tech side. On the legal side, we have built a unique concept of legally enforceable smart contracts, which means that smart contracts which run on the EquiDEI platform are not just pieces of code, but parallelly, every smart contract is also linked to an stamped and digitally signed contract paper, which is then stored in the database of the banks and then can be legally followed and enforced in court of law. So this is how we have taken care of the compliance as well as the tech layer so that the banking industry can readily come on board. We are directly working with the global payment networks like SWIFT and the payment networks which global banks like HSBCs and Standard Charters of the world have implemented. So once we go live with those integrations, I think all the banks around the globe will be able to use our payment services very easily.
Okay, gotcha. Thank you. We've got a raised hand from Alan, so please go ahead.
Thank you. I wonder how you can make sure the physical status of those properties can sync properly with the data in your system. Like say, what if the piece of machinery was, got on fire, destroyed, and in your system it doesn't sync, on time?
Yeah. Thank you for the question, Alan. So I hope you're able to see my screen here. I'll help you visualize it better. So basically, what we do is that we install some IoT sensors with every machine. So these are the 5 IoT devices that we have. Just so you can understand better, there are 2 modules that we decide. One is a capacity analyzer, which tells us the real-time electricity consumption of every machine which is on our network. Then we have a machine tracker, which regardless of the kind of machinery can be wirelessly attached to any machine and via the vibrations tell us the runtime of that machine. Then we have a worker tracker. If there's a labor or a workforce in a factory, it comes as a Fitbit band or an IT tag. It gives us the GPS location, daily footsteps and heartbeat of the worker. And finally, we have a vision box. By the CCTV cameras, we can capture data points like the machine runtime, how many trucks are moving out of the factory, how much raw material is there, and for how much time are the machines running. So then we have this blockchain protocol through which we are able to cross-verify all of this information. So for example, if I'm able to pick that the machine was running for X amount of time, right? I'm able to see that the energy was being consumed, the sensor gave me the reading that the machine was running, the labor was there, the goods were being produced, and finally there were tax invoices on the GST to be able to verify that. So all these 7-8 data points are cross-verified using our smart contract, and the authentic information is then shared with our investors. That is how we design the product. I hope you got it.
Got it. And then, do you see any hurdle from the regulators locally? So what it means, like what is this entire process recognized by the local regulations?
Yeah. So as I mentioned, we are already live with the second largest bank, which happens to be a public sector bank. And we are also working with regulators, not only in India, but in the Asian Pacific and around the globe to be able to mandate this installation so that they can build the required transparency in their utilization of the assets and monitor their portfolios. So yes, the entire process is regulated. We have designed it in the most data privacy and compliant way, looking at the needs of the current banking and financial system. And it is recognized by the regulators.
Yeah. Thank you.
Thanks, Alan, for your questions. Yeah, we have another question here in the chat. I will read it out. Wondering, how does EquiDEI's platform integrate with existing factory management systems to provide analysis of cash flow for lending partners?
Right. So we have a simple streamlined KYC process. Also today, what is happening in the Asian Pacific is that many governments are coming up with their own portals through which we do KYC using the digital identities, which are issued by the governments to the businesses. So for instance, in India, we've integrated with the taxation IDs as well as the bank account numbers that these businesses have. Whenever the users come on board, they are required to do a quick KYC. They put in their tax information, and using a simple OTP-based verification, we're able to fetch their information, like what were their past tax filings, what were the past bank account statements, and we do a simple automatic cash flow analysis of their banks. And now then, once we install our IoT sensors, which I just explained to Alan, we're able to capture the real-time information, and then this real-time information is correlated with their past financial filing. So we're able to set some correlations that if the company is using this much energy and they've reported this much revenue and expenses in the past, this is their forecasted figures. Based on real-time consumption, these are the forecasted expenses and the cash flow of the company, which are being utilized and might be reported. So that is how we do it.
Okay, thank you so much.
Okay, so thirdly, we've got Valentin and Artak, co-founders at Diamore. And if they're ready to step in, please go ahead. Passing the mic to you.
Hello, guys. My name is Valentin. I'm CEO and founder of Diamore. Let me tell you what's Diamore and what do we have. So here you can see blue, vivid, fancy natural diamond. 6 carat, really nice. And this is like annual growth is about 7.3%. And if you look at this, how it grows over the years, it looks like a nice investment, but there is something wrong. And when you look at the natural diamonds, you will see that this is not the kind of investment that earns you an income like immediately. And here, if we take a look at diamonds and gemstones considered as an investment, we see some advantages and disadvantages. First of all, it really keeps its value. It steadily grows over the time, and it's really compact in size, so it's really easy to store and save. And diamonds are the most durable elements in the world, and diamonds are really forever. But on the same side, on another side, it's really hard to buy a proper one that will be really good investment. You have to be an expert in this. It's difficult to resell until you know the proper guys. It doesn't really earn you income every monthly basis. And once you want to return your money and return your investment with some yield and revenue, it will take you 5-10 years to get some really good gain. And how we can change it? We can change it with our Diamore's ecosystem. So let me introduce you Diamore Marketplace. Basically, this is the place where you can buy and sell tokenized diamonds and gemstones. The Diamore staking, this is our technology, how we unlock the liquidity and generate yield on this. And Diamore token, this is the fund baked by diamonds to bring the liquidity to the DeFi space. So basically, the marketplace that we have, our experts, they found investment-grade diamonds and gemstones. We already launched the MVP. It's already live, and all the games are sourced from B2B markets, professional markets, from B2B prices. As you know, retail prices are drastically different from the ones that we have on the B2B market, and we have really low fees for the diamonds sale and resale. So this one could be really used to conveniently buy and sell diamonds. On the other hand, we have a diamond staking platform. So this is under development. Will be launched in the middle of November. Basically, what it gives the customer of a diamond, it provides 25% APR, and that's steadily going down until 5% APR. And how it works, basically, we just unlock the liquidity using NFT lending protocols and then provide this liquidity to centralized exchanges, low-risk DeFi strategies, and hedge funds, the companies that we work with. So this is the main technology, how we tokenize diamonds. We take already certified GA-graded gemstones, sourced from trusted suppliers that our experts choose. And then every single diamond gets this laser engraved with its unique ID, and then they were stored in third-party custody in Dubai and Bangkok. And we issue ERC-725 NFT that basically represents the ownership of this specific diamond. So this is the market size, and this is the entire diamond industry, and this is just a fraction of this that's we will achieve to obtain. And the traction that we have to the moment, we also, as a part of our go-to-market strategy, we launched application on Telegram. We already generated some revenue from this, from 4.5 million users that we got over there. And we also built in a demonstrational marketplace. So the guys, they just like in gamificational form, they like buy and sell those diamonds. We already sold the first tokenized diamond during Token 49 in April in Dubai. And this like showed that we completed all the legal structure and setup. And we also like already prepared crypto team jewelry collection, and we're ready to start the sales. Here is our roadmap, something that we already completed, and like the legal setup. It was most of the complicated stuff, most of the complicated part over here. And right now we are in like coming to the pre-seed round. This is the token that we're going to launch, the utility token, and basically it will provide the revenue, provide the share of the revenue of the company. And this is like the rounds that we're gonna have in the future. And our ask right now, we already got 400. We already got 400. 10,000 from our angel investor and private investors that we have in our network, and we have like a small round, complete our pre-seed round. Here our team, our angel investor is like 10 years of experience in a diamond dealership, and like all we are here to build this beautiful project. Yeah, this is about 5 minutes.
Okay, thank you, Valentin, for being in time as well.
In the end, yeah, I would love to hear your questions.
Yeah, absolutely, and we already got some in the chat as well, so let me read them real quick. So the first one goes like this: just interested to know how will Diamore handle the valuation and revaluation of diamonds over time?
Yeah, so the thing is, as we're targeting right now the diamonds and gemstones market, we initially started with the diamonds. Basically, the market is more, let's say, standardized because there is such thing that's called like a Rappaport, like as a market standard for the prices. So basically, we use this one for like evaluation of the diamonds, and we also like the diamond suppliers, they provided us for the like fair prices for the diamonds. And basically, as we have like a marketplace that's that is for initial like first time purchases and secondary sales both. So the customers themselves, they also like will choose like what's the fair proper price for the assets they have. Thank you for the question.
Yeah, thank you as well. Hope it's been answered and satisfies the user. So okay, let's hear another one. Sorry, how the educational app works to generate revenue.
Oh, this is like really funny. So I'm not sure, guys, if you know about that. Like the Telegram and Telegram mini application, they got like really huge hype like a few months ago, and we launched ours, and like it was really easy to get a huge audience that we like since that time we just like monetize, just like selling as a traffic and showing them in application advertisement and so on. So this is the thing that we just like generate some revenue from this, and still like utilizing them, like educating them how the main protocol works. So basically what they have like a marketplace, and they like earn some currency in this application, and then like using this marketplace they like buy these diamonds, they stake these diamonds, and they generate more. So they understand like how the protocol works, basically because like the diamond investment is not really simple. And also they have like some quizzes, they have some articles, and we like teach them like what are the grades of the diamonds, why they're different in price, and so on. So yeah, this is like a funny case. Like we like also use the audience that we got and like utilizing this to generate revenue.
Okay, thanks. And here goes another one from Sheldon. So what are the transparency mechanisms? There is a common crypto scam for tokenized RWA, easily detected by user inputs, not balancing against custodian operating costs. For example, if I reserve tokenized by 100 carats of diamonds, what assures that I won't be pilfered down to 99 carats diamonds or swap from GIA to conflict diamonds?
Yeah, so how the mechanism works, that you once you buy this diamond, imagine like this is one diamond, I don't know, like 5 carat or something, and you receive NFT certificate like of ownership, that has all the parameters and has the unique ID that is already engraved with ladder on this diamond, and the diamond is sitting in the custody. And you also receive like a document agreement that like your diamond is sitting in this specific custody in Dubai, let's say. And then you have two options. First of all, you can go to the custody, show your passport, like process KYC, and then like we understand how this is you, the one that could purchase the diamond, and then we lock NFT for you, and you redeem physical diamond, and you can go with this diamond and do whatever you want, like put it in a jewelry or something. And the second option is like to utilize it like a DeFi, using as a collateral, or just taking on our platform and so on. And this is like the one part of the like safety measures for the transparency. And another one that I just mentioned, that like once you redeem the diamond, we lock it, so you like still, we don't burn it, we don't burn the NFT, but we lock it so you cannot like sell it, resell it, like preventing the double value issue.
Okay, thanks. So guys, do we have more questions? So yeah, Sheldon says another thing. So I encourage you to consider a model for gas fee plus validation cost plus margin for remote verification. It should allow for more flexibility with partner custodians over time.
Yeah, the thing is that the custodians that we have right now on the market, most of them are like really traditional and really old-fashioned. And like what do we do right now with Chainlink proof of reserves that we are trying to integrate them, basically because like those guys, Chainlink proof of reserves, the technology, they need that like custodians, we will connect them via API calls and provide all the details about the diamonds. So we do it right now in a kind of old-fashioned way. So we just like show these documents that represent that this diamond is sitting in the custody. And once we'll find out this way how we can make it real, yeah, we're gonna like integrate with them also. And to have like a model with a gas fee, yeah, there's something like really interesting to also have the guys like who will come to the custody and like check if everything is over there and just get some commission for that. Yeah.
Okay, thanks for answering that as well. And yeah, this goes for me just real quick. How did you come up with such concepts? So what's the backstory of Diamore?
Oh, the backstory is I have a partner, and I already mentioned he's like selling diamonds in Thailand for last 10 years. And he's also like investing in crypto projects, and he's just like, oh, I have this idea, and like I'm from my background, I have like crypto and IT like technical background, so we just like came up with the idea. Initially, it was just how we can sell diamonds for crypto, you know, just like a fun idea to have a marketplace and sell them. And then we've been thinking like, all right, but what like might be the real problem, what might be the real issue we're gonna solve on the market. And then we see like there are like a lot of the guys that already have diamonds, they already have gemstones, and that's it. They like bought them as an investment, and they don't really understand like where they can go to sell them and where they can, how they can like generate yield with that. And they're really afraid because, for example, right now with a growing market of lab-grown diamonds, let's say, the diamond market is kind of, you know, like going under pressure. So the thing is like those guys, they like getting some kind of FOMO, and they just don't really want to lose their money. And we found a way how they can like still generate something like using the diamonds that they already have. So this is not something that is live right now, but we're gonna launch it soon. It will be like a service when you take your diamond that you already have, that you already bought somewhere, you bring it into our office in Dubai. We take it, we go to the GIA laboratory, and they do the authenticity check, and they check, okay, this is like the certificate and everything, and they understand how this is like real diamond and like what's the value of it. And then we put it in a custody, mint your NFT, and then you can like with this NFT generate yield. And once you have fun enough with this, you can just like redeem physical diamond back and like do whatever you want with it, or like resell it, or like even resell it in form of NFT.
Gotcha. Thanks for the answer. It's really interesting, and glad that you're so thorough with the process.
Yeah.
Guys, so do you have more questions, or Malika, should we move on? Because really time.
Yeah, let's proceed with the last project. Thank you so much, Valentin. a very interesting project, and thanks for your pitch. The last project for today is MatterFi. Michal, are you here?
Yeah, absolutely.
Yeah, please take it from here.
All right, so I don't have great video because I don't have good lighting. I'm on the road right now. I'm about to go back to Michael Turpin's conference. I'm in Vegas, but let me just jump right in because the time frame here. Usually our pitches are like half hour or an hour because of the amount of stuff we have. But I'm going to get through it in 15 minutes or 7 minutes and then do questions. So here we go. First thing I'm going to show you is one of our products. This is one of our clients' products. It's called Swiss Fortress Wallet. It's a Swiss company. It looks like a normal wallet, right? So you go in here and you can generate an address, but that's not what we want you to do. What we want you to do is use the send a name system. So in our wallet to send and receive, you can have a name like, I'm going to just use an example here, 0.02344 Ethereum to username Jakub. And to send it, I just hit next. I type in his name. And I unlock the keys with my PIN, and the money's sent. And if I want to do that on Casper, I just did it a second ago with Jakub as well. If I want to do it on BCH, for example, then that's, well, here's some sense to some other users. Here's another one. I've got some, Jakub's transactions in here. If I want to do it for tokens, no problem. I can go send in like 5,000 space dogs, for example. At Jakub, and it just works. So the question is, how does this magic happen? So I'm going to just show you one transaction on chain. Just because everybody's familiar with it, we'll just use Ethereum as the example here. So this one already went through. I'm going to open it up in Explorer. I'm going to go to the receive address, and I see, in fact, that 41 seconds ago there was a transaction for this 23.44 ETH. So the question is, and these are my other transactions between Michal and Jakub. So the question is, where does this address come from? Is there some centralized database? Is there some like central protocols handing out the addresses? Do the wallets have to talk to each other? Do we get on Telegram and I saved that this is his address? And the answer is no to none of those. Our wallets automatically compute the counterparty's receive address based on a one-way non-interactive cryptographic proof. And that address is always unique for every tuple, meaning that if Michal is sending to Jakub, it's to this unique exact address. But if some other user is sending to Jakub, it'll be a different address that I, as Michal, don't know. So you can put your ID up on Instagram and just say, send me all the crypto in the world, and no one knows how much money you received because all the addresses are computed dynamically across all chains, all tokens. And then that same protocol lets us do encrypted worldwide chat and also KYC. So here in the beta, this is disabled. You can download this beta, swissfortress.com, but I'm going to just show you in our UI model what this looks like. So because there's the cryptographic proof to his on-chain addresses and the names involved, we can now have a decentralized identity protocol, which is, as far as I know, the world's only decentralized universal identity protocol. So users can have different decentralized, in this case, they're called Fortress IDs, but it just depends on the project. So we white label everything. And you can have an ID that has a combination of blinded claims, unblinded claims, meaning that you can show your driver's license to somebody. You can just have an attestation that says you're over 18, you're from Taipei, for example. So that's the wallet. And on top of that, we also made a hardware wallet and a custody system to match. So I'm going to jump into the deck here and rip through the deck as fast as humanly possible. So we are MatterFi. We make easy to use fintech for humans and AI. This is obviously important for AI because how's a robot going to get a counterparty's receive address? Is it going to get it on like Telegram and be like, hey, bro, what's your receive address? So now everybody can just use this our send to name system along with the infallible KYC that goes along with it. So my personal mission is, I've been a hacker my whole life. I worked inside the Beltway. I worked for the Navy. I built an intelligence system for the U.S. Navy. I hacked voting machines and airliners and slot machines and all sorts of stuff. So my thing is, I'm tired of people getting robbed. So my personal mission is to create safety, accessibility, and trust. And I believe we've done that with the platform. And we do this across software wallets, hardware wallets, AI agents, and custody systems. Just yesterday at the Turpin conference, we released a demo of our first autonomous AI, which is basically running like your wallet, but it's completely autonomous. It just runs on your laptop, and it looks basically like ChatGPT, but it's entirely autonomous and not in the cloud at all. And that part of the code we're open sourcing. So the problem is, obviously, millions get stolen in crypto all the time. Everything is hard to use and access, and it's not compliant with rules and regulations. And you've got, and the AI space, this is even compounded because it's currently with the current state of the art. Once the AI agents start to really roll out, they're going to just be getting robbed left and right. So we're solving that problem. And the ultimate sort of core reasons there's no off-chain cryptographic proofs. I'm going to not really go deep on that because we don't really have time. But the bottom line is we made an easy-to-use, secure, and on-chain compliant solution, right? So this is distributed as Matter wallets, which are white label wallets, and they're AI agents. Matter nodes to our custody system and their hardware access devices. Brinks is our biggest client on custody. Let me jump in and say, we're not just a wallet company. We're not just custody. We're all the things. Mostly because this off-chain cryptographic engine allows us to have one piece of software that does all these things at once. So why now? Well, everything's going digital. You've got the rise of AI, et cetera. Our market size is roughly 447 billion. We hope to take down 100 million of revenue in the next 12 months, roughly. In our projections, we even cut that down, and that's actually happening right now. We're really onboarding a lot of clients, one of which is Trrue, who you saw at the beginning of the call. And I was just talking to Owen this morning about something unrelated. He's like, "Hey, man, I see you're on this VC call later today." I was like, "Is that the same one?" I'm like, "Yeah." So we so far raised 4.65 million. Yesterday, we got our first Series A check at 100 million valuation. We've signed now like above 10 clients. I got to update this slide. So we've got Swiss Fortress, Miles and More from Lufthansa, EquiDEI, Brinks, DevX DAO. Some of our investors was Percival, which is Brock Pierce. And now we're basically engaging with VCs on the Series A. 1.65 million in revenue so far, and we're raising. Here's our team. That's it. So the only other thing that's useful is to just talk about monetization. Is so for the wallets, we charge a integration fee, and then we have a rev share on the names. So if you like, for typical name will cost the user $10 a year, and then we pay 25% back to the person that sold the name or the operator of that particular namespace. And then on the custody system, we've got assets under management. And the one thing I didn't cover at all is like our custody, which I can talk about, but it's basically like the ultimate Fireblocks killer is the way I would describe it, because it uses off-chain cryptographic proofs to operate the entire system. So the HSMs actually talk directly to the wallet, and all the off-chain manipulation is done directly via wallet, just like an on-chain transaction. So that's the pitch in 2 seconds. Happy to take questions.
Yeah, thank you, Michal. I think you can elaborate a tiny bit more and expand your pitch and questions. So we already received a couple of them. I'm going to read the first one. So what markets or regions are you prioritizing for your initial rollout, and why?
So we're actually right now, we're in Singapore, we're in Dubai. We've got presence all over the world. We're in Switzerland and we're in America. So like the beta, the most, Swiss Fortress is a Swiss company. So, that's obviously one of the first clients, but now we have a client in Ireland, as you met earlier. We've also got like a really robust sales pipeline with most of the blue chip wallet projects in the world are now either directly in discussions with us or in like late stage or early stage, because the wallet tech is available by API now. So you can, if you're like say MetaMask or you're Unstoppable Domains or you're Exodus or you're any of these wallet companies, and you want to start using send to name, we're making that available as an API. So I expect it's going to be added to a lot of wallets worldwide. So I would, basically every region that's doing crypto, we're doing business in right now.
Okay, gotcha. Another one goes from Sheldon as well. So would you trust a partner like Square or PayPal for white label integrations if they gave you hardware segmentation in a colo or similar? It's a difficult market to permeate even if you meet it perfectly. Crypto wallet businesses a much smaller challenge and much smaller TAM.
Well, so I'm looking at the question here. Would you trust it? Well, we do our own hardware, so all our hardware is our own, and we do actually have colo with Brinks. So our custody systems are going into the Brinks vaults as we speak. We just installed the first one a couple of weeks ago. So that custody side will be shortly available as an alpha for testing, and then we should have everything in production by the end of the first quarter. So, I mean, it's the we haven't experienced any resistance really in terms of market penetration because the feature set is so distinct and so different, right? There's a million lines of proprietary code here and there's 9 patents pending on the tech. So there's like Unstoppable is an excellent example of like a company that we may or may not be in discussions with to help them, right? To make their name system private. So same with the ENS, right? So it just really, this question has not come up. Like, as best as I can tell, by my estimate, 50% of the large players in the world will adopt our tech based on like where we're at today.
Okay, thank you. So guys, I will allow 2 more questions to us because it's already time. But yeah, it's really interesting to hear more about your project, Michal. So yeah, guys, feel free to address any questions in the chat or raise your hand.
How did you raise this first check at the A round, and was it difficult to close the previous round? And who was your lead investor, and what are your criteria for investors and the minimum size you accept?
Yeah. So everything about investing. Got it. We, as I think every business until just recently, it was a real struggle bus raising any money, right? So because basically like this company started in the pandemic, and then we just had crypto with disaster after crypto disaster, FTX and crypto winter and doom and gloom and inflation and all this crap. So it was really, really hard. And then just recently, with the sort of anticipated political shift and also our queue over to AI, because it turned out that our tech, which, I mean, when I started this project, I wasn't thinking, hey, this is great tech for AI, but that's gotten us a ton of traction. So, we first raised 1.65 million at 20 and like 21. Then we raised 3 million at 30. We completed that 2 months ago. And that round took like a year to finish. I mean, it was not easy. And then the Series A, we had our prior investors just get hype and they start putting money into the A. And now we have some of our, essentially the beginning of our Series A is entirely being done by our clients and our existing investors. So the first 2 million of the A is basically coming. We're raising 20 at 200, with the first 2 million being a 50% discount of 100 million valuation. So that first 2 million is being done by the existing family that just like the traction, like what we've done. Minimum ticket size right now is 100,000 in this first 2 million. Before that, our tickets were, I think we had one person for like 10, but the typical was about 50. And there was a few that were like 25, but we also had a few guys that just wrote $1 million check. So we've had the sort of the gamut of like really small to, like, I had one investor that met me and at the next day we had $1 million. So yeah, I guess we got lucky. We have a cool product. But so there wasn't like a, one cookie cutter way of like how we raise money. It's all about just showing the value and getting the right partners on board. So my criteria for people that are good investors or people like understand the tech and are like really passionate about like what we're doing, which is making all of crypto way easier and way more secure. Like one of the things that I like to point out is that we completely eliminate phishing because there's no place for a user to put in an address. They really have to try to get robbed. They could, in our interface, they could put in a hacker's address if they really wanted, but typically with our user experience, they're going to be sending to name and they're going to be asking for KYC proofs for any large transactions. So if they don't get that, the hackers are going to have to go just stop phishing because it's just not an effective strategy anymore with our system. So I get really passionate about that. And, I think that our, my passion, the team's passion, and yeah, we've definitely been through a rough period like everybody has, but it's that's what got us through. It's just like perseverance. There you go.
Yeah, thank you so much. Very interesting.
Thank you everyone for participating, for spending some time here with us this day. And yeah, to all our projects, really huge shout out for spending some time and hopping in here. And guys, just to remind you real quick that if you want to bring your project here on our collective calls and pitch here, just feel free to fill forms for participation, feedback form that Malika kindly provided in the chat. So yeah, just don't forget to check chat for contact details of the most interesting speakers. And yeah, thank you everyone for participating. See you next time. It's been a pleasure. So yeah, have a great weekend as well.